Good morning, traders. Happy Monday. You know what time it is. It's bacon time. So glad to be with you guys today. We have a fun and phenomenal show for you today. We're going to be taking care of, we're going to be going through some interesting concepts. When we talk about what makes a trader successful, usually the successful traders aren't saying we overcomplicate it to the point where only a handful of people can understand it. What they often say is we simplify things, and we're going to have a conversation along those lines today. But before we get into that, we've got a little bit of business to take care of. First and foremost, we will be giving away 3 evaluations during the course of this live show. So check out the chat and make sure to fill out the form that will be in the chat here in just a moment. Go ahead and get that filled out for a shot at that. Also, last week's winners, and let me see if I don't totally butcher these up, Ashley, Michelle, and Yumini. My apologies again if I messed that up, but congratulations to you guys. Evaluations in those pockets should have all that information already. And maybe if you're out there watching, you might be one of the lucky winners from today's episode of one of those 3 Apex Trader Funding evaluations. Speaking of Apex Trader Funding, we have what I consider to be the best sale we've ever had. 70% off on all evaluations. Yeah, I know that's not 90% off. However, here's the kicker. $40 lifetime reset fees. We've never seen this one before. This is the lowest all-in cost from evaluation to PA ever in the history of the company. $40 lifetime activations until November 5th, 11:59 p.m. Remember, you can have an existing evaluation as long as it gets activated by November 5th. If you purchase an evaluation before November 5th, it still needs to be passed and activated prior to 11:59 p.m. on the 5th. Okay, that said, Forex Trader, we've got some fun stuff going on over there. I haven't really pushed too much out yet, and I know there's some people waiting. John, I see you, and I'm looking forward to our chat this afternoon. But we've got I was trying to get a notification out this week, but it just couldn't happen. Bear with me. Technology is technology, and it doesn't always behave the way that you want it to, but I'm hoping within the next couple of days I will have a fun announcement on there. So make sure to go to theforgetrader.com/join for all announcements. Also, check me out on social. If you noticed, I look a little bit ridiculous today. I am embracing the ridiculous for Movember. If you're familiar with that, that is just grow a mustache for a men's health awareness. I've also committed to walking or running at least 60 miles over the course of the month of November. So you can get all the information on that. This is a fundraiser. So I'm going to ask you guys to go to my social, click the link. You'll see it on there on the notification for this today's show. I will also continue posting that up on all of my socials in short order. So go in there, give a buck, give $5, give $100, depending on where you are in your world. But go ahead and donate to that. It's important, and we need opportunities like this. And I am making myself look ridiculous for a reason. Yes, I did start off with a little bit of a cheat. I'm a little longer than clean shaven from the first, but I want to see how glorious we can make this thing by the end of the month. So have fun with that with me, guys. Anyway, we'll talk more about that as we go through this month. Now, all of that said, today's show is going to be a lot of fun. I have Dominic, the AKA the Prop Firm Poppy. I wanted to make sure I got that out right. I promised him I was not going to call him Poppy during the course of the show. I wouldn't do that to any of y'all. But let's welcome Dominic on today's episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Dominic, good morning, man.
Good morning. Good morning.
How's everything going?
It's going great.
Awesome.
It's been fantastic morning. Great weekend.
Yeah, very, very nice. Now, I threw out there, I'm not going to call you Poppy during the show, but, as we go through here, if you like anything that Dominic has to say, follow him. Check him out on all the socials at Prop Firm Poppy. He's got some good stuff on there. So let's take a step back, Dominic. Let's talk a little bit about the early days of your trading journey, man. How did you get into the game?
Well, I first got into trading. My old college roommate, he was trading Forex and trading overnight, and I didn't really like waking up at like 2 or 3 a.m. and so Forex really wasn't for me. But then I found futures. I love futures just because it's like it's actually in in the morning. I go in, it's a couple hours of volume that goes in, and a lot of prop firms like offer features
Mhm.
in stocks. When it comes to stocks, you have to look at so many different tickers, and that's just too much. Like going through all these different stocks and trying to find the right one. So NQ works for me just because it's simple. It's one indicator, one ticket out look at, and that's it.
I
So I
love
try
it.
to keep it simple.
So look, I kind of teased it a little bit, and we'll get into the charts here in just a few minutes. But before we get into all of that, I teased the concept of simplicity. Now, you and I both know I don't know what your strategy is, but you told me you could teach it to me in 2 minutes, right?
Yeah,
So
yeah.
I'm going to hold you to that. But before we I want to talk about why that level of simplicity. I mean, did you start off with a lot of complicated strategies and things like we all do, mixing a little bit of ICT with a little bit of support resistance, with a little bit of supply and demand, and throw in some trend lines for good measure? Or did you start off simple from the get-go?
No, I did not start off simple. I did not. My old roommate, they tried to get me into it. He showed me his screen. He was just trading off his phone. It had RSI, VWAP, like EMAs, Fibonacci, everything. Like it was just nothing but colors. And for me, I'm just like, all right, I tried it, didn't really like it, didn't understand it, and then like I every component, like it makes sense where it gives you more confident that the trade will work. But for me, I'm just like, it has to be like simpler. Like there has to be a process where there is like just okay, this is the direction, this is where I'm gonna go. Like at the end of the day, if you have proper risk management, you can just sustain the drawdown, even if there is any drawdown. I found that scalping was a lot better and a lot easier for me because that feedback loop is very quick.
Right.
When it comes to day trading, like you have to stay in a trade maybe a couple 15 minutes to a couple hours. And for me, that I'm pretty impatient. I like feedback to be like quick, like okay, this strategy worked, it didn't work because of X, Y, and Z, and I can do the 5 whys from there. I used to work at Amazon, and you have to know at least 5 levels deep on what went wrong.
Yeah.
And when you do day trading, like the process is a little bit too long for me. And I want to get down to the root cause, because the faster you get to the root cause, the faster you can fix the problem. You can get a better solution, and then you just make more money, at least when it comes to trading.
I love that. I love that. Now, what I'm hearing you say is that there's hope for us who are impatient to find something that consistently pays out, right?
Yes, because trading is all about finding a strategy that works best for you. Like there's 1,000 different strategies out there, but at the end of the day, trading is 80% psychology. What strategy makes you the most comfortable, and what process makes you feel very confident in it? And for this strategy, is very simple, to the point, and I'm very confident into it because it has simple rules.
I love that. And listen, that's not to say there's anything wrong with having 10 indicators on there and looking for, your fair value gap inversions and
Yeah.
that trend line liquidity all at the same time, if that's your strategy and if that suits you. But you made the point there that I think is so important. You have to find a strategy that fits you, right? Why are there so many different strategies? Because there's so many different traders. There's so many different risk tolerances. There's so many different patience levels. And we all have different amounts of time available. So one of the key factors, I think, what I've seen in terms of successful traders is really crafting that strategy that fits you and not necessarily trying to fit yourself to a strategy that somebody taught you.
Mm-hmm.
Yeah.
Yeah, I completely agree.
So in terms of simplicity, listen, I love simplicity, and I would like to say that my stuff is super simple. It's not very, very complicated, but it's not as simple as I would like. And so I'm really curious to see what it is that you've put together that's a good fit for you, for your personality, and the dynamics of Dominic as a trader. So let's go ahead and pull up the charts, and I'm going to hold you to that promise. In 2 minutes, I want to know exactly how your strategy works.
Okay.
And those charts should be coming up right about there. We go.
All right. Let's see. So long. Oh my goodness. All right. So for me, for my strategy is I'll only trade 2 hours of the day. The first 2 hours of market open. That's why you see this green box in the outline.
Yep.
That's just lets me know, okay, Dom, it's time for you to trade. You can actually work. All I look for is EMAs, moving averages. If we just focus on the screen with the white background, this is my main. This is what I'm looking at majority of the time. All I'm doing is saying, hey, if the yellow line is on the bottom, we know we're in a bullish bias. If the line is on the top, we are in shorts.
Okay,
that's simple. So if if the yellow line is on top, there should be no reason for you to be buying. Like, there's no reason at all. You already know that the bias is short. You go with the trend. Like, I scalp, but we just go with the trend until it actually breaks, and a break is just crossing back. So this little area where the yellow line went below the blue, it NQ wanted to go by bull bias, but it didn't. It failed and just went back to yellow line being on top. So you're gonna short again. It's literally that simple. We wait until market open. We don't trade pre-market because this is our area of where we're working. So here at market open, you could have went for buys, and as soon as it cross, shorts. All you're doing is waiting until you get another cross, you get out and go back in. All you're doing is riding the wave. And if you want something that's a little bit more cleaner, if you want something just a little bit more cleaner while you're trading, these are just the Haganashi candles where you can see like it's just a little bit cleaner than it is over here on the
white. A lot of time on the Haikinashis. I'm familiar with them. I know that they tend to have that smoother look, and that's why a lot of people like them. But I've just never figured out, how to get the movement from them that I would get out of my normal candlesticks.
Right. It's just if you want it to look smoother, that's all the Haganashi candles will do. And that's pretty much it, really. Like that's the strategy. If you're getting at the crosses, and that's it. If you've already missed that opportunity where you weren't able to get in at the actual cross of the EMAs, you'll just wait until it taps the yellow line, and then you can get in for a short there.
A little rejection off of that. Now, So is that really the trigger? Is really that crossover?
Yeah, that's it. The cross at the cross is the best time to get in. If you got in right here, let's say even after this candle closed, and you got in at 26,207, which that would have been like your worst entry. You would have been in the trade all the way down until here. 26,119. I don't know about you, but that's a pretty good day.
That is a pretty good day. So William asks a great question. What are your EMAs? I can't remember if you said as we were going through it.
So I have 3 simple moving average, the 3 close and 7 close, and that's it.
3 and 7. That's it. Yep. All right. There you go, William. Now, when I look at this chart, of course, you have your crossover back into long territory. Is that exiting your short only, or are you actually taking a long at that point?
Yeah, I would take a long here as well. Like if it's crossing back into the upside, I'm going to close my short position and get in for a long.
Okay.
But again, I got out of this trade very, very quickly just because this doji formed. Most of the time, when I see a wick on the top, a wick on the bottom, that means indecision. The market doesn't know where it wants to go. But most of the time on that following candle, it's either we know that direction is going to be very strong after that doji candle. So either going to go up or go down. And for this one, it just went back down to the downside, which we've been short bias all day. So
which if you've seen the market today, that's a good move.
Yeah.
John asks, are you on the 1 minute?
Yes, I'm on a 1 minute just because it gives me a lot. It gives me earlier entries, and it gives me a lot more opportunities if I wasn't if I missed my opportunity here at the first cross. It gives me a lot more opportunity and to actually get back into the trade. If you want you want less opportunity to get into trades, but it is a slightly higher win rate.
Sure.
You can go up to the 3 minute and wait, but you really won't have too many entries. So you would have been in right here. You never would have got out until you still would have been in the same trade because it hasn't crossed yet.
Right.
And you got one opportunity to get in.
My opinion is it's going after that Asia low. So back down into that new week opening gap. So that might be a good move at this point. But again, we don't know. All we can do is follow the instruments that we use to tell us the story that we want to know.
Exactly.
So realistically speaking, so for those first 2 hours, you're pretty much in a trade at all times. So you might be going back and forth, but is that a fair assessment of your typical 2 hours section?
If I'm sitting on my hands, watching the trade and just like keeping an eye out on my drawdown. But other than that, you know the direction of the trade because the yellow line is on top. Okay, I know. If I click any button on here, it's going to be for a short.
Right.
Like if you want to go against the trend, if you want to go against the market, I would say good luck. But 9 times out of 10, you do better going with the trend, going with the market. And it says we're going to the downside. So we're retail traders. So it's not like we have enough capital to move the market. So just go with it.
For sure. Now, you talked a little bit about risk management, and of course, that's obviously an important question under any strategic condition. So, when you enter that trade, where are you putting your stop loss?
Actually, for my type of strategy, I have my stop loss initially around $200 to $300 stop loss for like one contract, and then I'm slowly adjusting my stop loss just a couple ticks above the yellow line, just so I can enjoy the ride all the way to the downside.
Right. So you're trading a single mini?
Yes.
Yeah. So a couple $100 is what, 10 points?
My
math is right. How's my math today?
Yep. Somewhere around there. And then again, if I have multiple with me, I have multiple accounts. So I don't go up in size or I just add more accounts and then just do it that way instead of I may go up to 2 contracts if I see that something is in the market or I just have more confidence in this trade that is going to go to the downside, but that's about it. And just ride the wave until the trend breaks and then enjoy it and just move on and wait until tomorrow.
There you go. Well, that's beautifully simple. You did not disappoint. So let me ask you a question in terms of your own personal strategy now. Of course, we risk management has multiple facets. What are you willing to risk on a trade? What are you willing to risk on a day? And is there a point where you're like, I'm done for the day. I've hit X amount of profit for the day and I'm out?
Okay. Yeah, for me, it's really based off the prop firm. So if I am trading with Apex, you have a 30% consistency rule that you have to follow.
Sure.
So I want to make sure that I go for anywhere between $500 and $2,000 a day per account. Once I hit that threshold, I'm pretty much done for the day. Just because if I go more than that, I'm gonna have to make more the following day. So I'd rather just stay under that 30% consistency rule, make my money on these accounts, and then move over to either another prop firm and work on those accounts, or just be done for the day. Once you get above that, for me personally, I like to get my like PA accounts to like 7,500 in profit, and then just ride the wave until I can get the full payout.
Sure. Now, what size accounts are you trading? Because the $2,000 on a 50K account is going to put you in some serious 30% trouble.
Yeah, so I trade with the 150K accounts, and that I've never purchased a 50K account with Apex.
No.
Yeah, I've always been 150K, just because it makes sense with the drawdown that they give you, and that's pretty much it because it just made the most sense to me.
Now, at this point, how long have you been trading this particular strategy this way?
This I would say since April 29th. Well, no, May. So, after I left Amazon and decided that hey, I'm going full all in on trading.
Mhm.
Yeah, I was like, okay, let me get back to my roots. Let me figure out uh a strategy that worked for me,
Mhm.
and this strategy works perfectly because I know I have set rules of okay. Because one of the hardest things in trading is you don't know if the price is going to go up or is it going to go down.
Right.
And my strategy has clear rules. If the yellow line is on top, you know it's short bias, so you should be only taking shorts. If the yellow line is on the bottom, you know you should only be going for longs. And that cuts out, you know, well, I say at least like 75% of the decision for me.
Just the
Now,
noise. Yeah.
yeah, and now the next decision is okay, what is a good entry?
Mhm.
And for me, like now you're just worried about the entry. And if you got a limit order or market order trader, that's your next decision that you have to make.
Right.
And that's really not hard. As long as you get in a trade, you know, it could be the worst, like I said, like at that 26,207, that could be the worst entry, but I'm pretty sure this morning I got in at 26,230, 31 or 32, somewhere around there at the actual cross.
Well, and I think that speaks to the consistency with which you've traded this strategy. You start to learn how the market operates within certain arenas, right? So
Hmm.
you know from your experience when you start to see this cross, whereas someone who's newly trading the strategy may need that candle close to give them that confirmation, to give them that warm and fuzzy feeling about taking that short. You've watched this enough times, you've watched this take place, and you also know that first 2 hours of the market because you see this every single day, right?
Exactly.
That experience, how much of an impact do you think that that has had on, let's call it the subjective side of trading a very objective strategy?
Oh, for me, it helps a lot because you you're making a lot, like if you're trading and you're watching the same price action, the
Yeah.
same, like you're looking at the same chart every single day. I feel like my feedback loop that I get from watching NQ every morning is like 10x, because I know there's people that trade stocks and they go through 5 or 6 or 10, 50, whatever, how many stocks.
Mhm.
But I'm looking at NQ. I can learn its behavior. I can see how okay, is it starting to have some indecision in areas. You start charting out zones and stuff. That's what this the yellow line is for. It's just pivot points. It's a very simple indicator. But I
Mhm.
know, okay, around this pivot point, if I see indecision, okay, it may make a decision to going up or going down. But if it just breaks through, just like on a chart on the left side, it just went straight through it.
Mhm.
We may go farther down, and I can stay in the trade longer.
Maybe
If
this is
not,
an opportunity to kind of tighten up stops if you know that there's potential trouble coming up.
yes, and that's what also the where you see those little orange dots.
Mhm.
If you're struggling and you're not sure where to put your stop loss, those dots are where you actually can keep adjusting your stop loss to.
I love it, man. I mean, yeah, again, you didn't disappoint. Definitely simple, functional. Yes, you have developed a level of discretion, but that just comes with time. And that's, I believe, any strategy. I think that traders will eventually, long-term success comes from being able to properly manage discretionary trading. I know that's
Yes.
something that I'm working through right now, because discretionary to me means sizing up, going all in, and trying to get out of a hole. And that's usually when I blow some accounts. I'm trying to get out of that particular habit, but that doesn't mean that discretionary isn't a part of the process.
Yeah.
And I do think that it is an important part of the long term. Otherwise, we'd have a mechanical strategy that 180% of the time gave us a 2-to-1 risk to reward ratio, and we'd all be sipping Mai Tais on our private islands. That's not the world that we live in. So
Mhm.
I love that. So let's talk about it. You kind of hinted at it, and I kind of want to explore this a little bit. You mentioned a very specific date that you went back to this strategy and started, full time actively utilizing the strategy. What happened? If you want to share a little bit about that story.
Yeah. So for me, I was so for my background before, so straight out of college, I went to work for Amazon.
Mhm.
I was a college hire, and I loved it. I got a lot of experience. I grew as a person.
Mhm.
Then one day, you working 50, 60 hours and working, yeah, for only at the time it was only $4,300 a month. And
Mhm.
I'm working 40 to 60 hours a week, going in at 6 p.m., leaving at 6, 8, 9 a.m. overnight.
Yeah, that's tough.
Very tough. And I love management. I love working with people. I love working with my team. And seeing people develop.
Mhm.
But I just I didn't see the return anymore. And then on April 29th, I just had a a peer of mine that was another manager, and they just talked to me, yeah, to talk to me like I was a child.
Mhm.
Talked to me and said so many things where I'm just like, I think you're just to the point where I'm like, you're searching for a reaction,
Right.
because the situation of everything they said was not necessary,
Sure.
um and just to prove your point of, hey, i'm I'm your boss, or you just want to see who who has the biggest set. Like, this is Amazon, the shift is over, everybody's ready, time to go home, it's the last day of the week. And yeah, so they just made me feel less than a person. Like, and I'm just like, in that moment, I stayed calm and I'm just processing everything, and I'm very, very angry, but also I'm a professional, so I'm gonna stay professional in this environment, even though the other person was not.
Mhm.
And something just clicked in my mind, just like, even as mad as you are at this person,
Mhm.
you have to be, if not as mad or upset with myself, because I allowed myself to be in this situation.
Right.
I allowed myself to, work for Amazon, clock in, clock out, and I decided this is what I was going to do with my major.
Yeah.
Like, everything resulted to every decision that I decided up to that point. And I was just like, you know what? I'm gonna bet on myself, because I've traded in the past. I've gotten payouts from other prop firms before, and even I'm ready to take that risk,
Yeah.
because this cannot happen again. Because
Right.
if it happened again, it's on me. So take a bet on yourself.
Sure.
And once you go from 40 to 60 hours of working, that is your baseline for how much time you put in for back testing.
Right.
That's your baseline for reviewing your refining your strategy, and just doing everything that the top 20% of traders do.
Yeah.
And you focus on that, because you can find out, you can ask ChatGPT, what did the top 20% of traders do?
Yeah.
Because they all make over 100 grand a year.
Yeah. Easy.
And do those activities. And
Mhm.
that's what I did. I just kept it simple for myself. I'm like, hey, this is how much time you used to work. This is how much time you're gonna put into trading, and let's go at it. And then I
So
just told myself, it has to work or it has to work.
well, putting in the work obviously is a key component, but let me ask you, you no longer have your day job, you no longer have all of the things that come with a day job, to include the schedule, but also to include some perks. Obviously, there's a reason we work, right?
Yeah.
How much pressure did you feel to make it happen and make it happen quickly? And did you find that that was detrimental because of the circumstances being like, I didn't trade my way into quitting my job. I quit my job into becoming a full-time trader.
For me, it added to the perspective and the mentality of, this has to work or it has to work.
Yeah.
And it worked for me because, once you, like, everybody can go on their phone and swipe over to the left and see how much time they're spending on their phone, and then it'll break it down by category.
Sure.
for me, I was like, I looked at that. I'm like, dude, you want to be financially free, you want to travel. This category should be close to zero. Spend time doing this because it's gonna give you the biggest payoff. Like, because again, I used to work for like $4,300 a month, 40 to 60 hours a week, and saying, hey, let me do these small little things. They get to whatever return. Let's focus on that now. And that's what I did, and it paid off. It worked out for me, and it keeps going because it keeps motivating me. Because for me, it's like I already told myself I'm not going back to work another job. Like this is it. So make it work and follow your rules, do your back testing, do your refinement, and you'll get there. And I have, and it works.
Congratulations on getting there. That's a big accomplishment. I know that this is a big goal for a lot of traders, and there's different ways, of course, of going about that process. Probably the less impulsive is going to generally be the smarter route, but sometimes that pressure is what we need. And I'm so pleased that it's worked out for you the way that it has. I could absolutely do this for another half hour, but they haven't given me the bigger slot yet. But I do want to ask real quick. You refer to yourself as Prop Firm Poppy.
Yeah.
What are you showing on social media? What's Prop Firm Poppy all about? And where can people find you?
Okay, yeah. So Prop Firm Poppy is actually the name was actually created from my community. I have a small group of people that I show my strategy and teach them on a school where I walk them through the strategy, show them how to trade, how to leverage prop firms, and walk through each step of, okay, this is my next step. This is where I'm at. Let me fix my mindset. We have some books that you need to read. And we just go at it. We trade every morning. I check in. We do some psychology sessions, just to get you moving along.
Sure.
And I do one-on-ones as well, just so, hey, because I want my people to pass challenges. I think 80, 85 or 86% of all traders that go to prop firms fail. And for mine, I want to make sure if you're in my group that you pass a prop firm and you get that first payout.
I love that, man. Go check him out at Prop Firm Poppy on all the socials. Check him out, see what he's got going on. If you have any questions for him, feel free to shoot him a DM, and I'm sure he would be happy to get back with people on that.
Yeah.
All right, I'm a little over time, so I'm going to go ahead and call it here. Dominic, thank you so much for spending some time with us this morning, sharing your insights. I love the simplicity of what you do, and I think that's what will attract a lot of people to be curious about what it is that you're doing and how it's all coming together for you, and how maybe something like that can come together for them as well. For all of you out there, make sure, go to apextraderfunding.com, use promo code Benzinga, go get some evaluations. If you haven't already done so, fill out the form in the chat, and you'll have a shot at some evaluations. If you get those passed before and can get them activated by November 5th, at 11:59 p.m., not midnight, 11:59 p.m., make sure to get that taken care of. You've got $40 lifetime PA fees. For those of you who have activated a few PAs in your day, you know how big a deal that is.
Yeah.
Hopefully you're not popping 20 at a time over and over and over again, but if you are, that's a big savings right there. Make sure to come back next week. We're going to have a phenomenal show for you, and if you're curious to see what the little lip tickler here is looking like in another week, come back and check it out. We should have some fun before the end of the month. Go to my socials at The Forged Trader and donate a few bucks to the cause. I love having fun with stuff like this, but there's always a reason. Go check it out and pull out the credit card. Let's throw a little bit out there. Anyway, thank you all for hanging out with us today. I appreciate y'all. Love you all. Dominic, what a pleasure to get a chance to speak to you today. And I will see all of y'all next week on the next episode of the Trader Bacon Show. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.